Most people think banks, credit card companies, and lenders exist to help people who need money. That's not what they do. In reality, money gets thrown at people who already proved they don't need it. And if you don't understand that, you'll spend years frustrated wondering why nobody will fund your business, why you keep getting denied for credit, why grants seem impossible to get, and why it feels like the financial system only works for people who already have money, because honestly, that's kind of true, but not in the way people think. See, most people walk into business backwards. They think the order is, get money first, then build the business. But in the real world, you build the discipline first. Then the money shows up. And the crazy part is, once you finally stop needing the money desperately, that's usually when access to capital starts opening up. I learned this the hard way. Years ago, I thought business loans worked like Shark Tank. You come in with an idea. You explain your vision. People hand you money because your dream sounds exciting. That is not how reality works. Banks are not investors. Credit card companies are not your rich uncle. Grant organizations are not trying to rescue you from financial problems. They are looking for evidence. That's it. Evidence that you can execute. Evidence that you can manage resources. Evidence that you won't panic under pressure. Evidence that if they hand you money, it won't disappear into chaos. And this is where a lot of entrepreneurs sabotage themselves. They spend years chasing funding instead of building proof. Huge difference. You'll see somebody with no business history, no revenue, maxed out credit cards, overdraft fees every month, unstable income, trying to get a $100,000 business loan, and they're angry when they get denied. But from the lender's perspective, they're thinking, if you can't manage $2,000 responsibly, why would we trust you with $100,000? That sounds harsh, but that's exactly how the system thinks. And honestly, it makes sense because business gets romanticized online. People talk about entrepreneurship like it's all vision boards, Lamborghinis, and freedom. In reality, business is resource management. That's the game. Can you take limited resources and produce a result? That's what every lender is trying to figure out. And ironically, bootstrapping teaches you that better than anything else. I know people hate hearing that. Nobody wants to hear start smaller. Nobody wants to hear you may have to grind without funding for a while, but that phase matters more than people realize. Because when you bootstrap a business, you develop something lenders actually trust, constraint-based execution. Meaning you learn how to make things work without unlimited money. That changes how you operate forever. You stop solving problems by throwing money at them. You start solving problems with systems, creativity, efficiency, and effort. And honestly, that's usually the difference between entrepreneurs who survive long-term and entrepreneurs who collapse the second conditions get hard. Because easy money can actually destroy bad operators. People don't talk about that enough. Somebody gets a huge loan too early. They lease expensive equipment, rent an office they don't need, hire people quicker than needed. Spend on branding before revenue exists, by courses, by software, by distractions. And 6 months later they're drowning. Not because the idea was bad, because they never learned operational discipline. Meanwhile, another person starts with almost nothing. No investors, no big credit lines, no fancy setup. They're doing the boring work, learning sales, learning customer service, learning marketing, learning operations, learning cash flow management. They're figuring out how to survive with limited resources. That person becomes dangerous later. Because once capital finally arrives, they know exactly how to deploy it. That's when money becomes leverage instead of life support. Huge difference. A lot of people want loans because they think money creates competence. Usually it just amplifies whatever you already are. If you're disorganized with $5,000, you'll probably be disorganized with $500,000. If you waste time broke, you'll waste time funded. If you avoid hard conversations before success, you'll avoid them after success too. Money reveals operating systems. It doesn't magically install them. And once I understood that, I stopped obsessing over how do I get funding. I started asking, how do I become somebody funding naturally flows toward? That question changes everything, because now your focus shifts toward credibility. You start caring about consistency, cash flow, financial behavior, execution, and track record. Even small wins start mattering. A profitable side hustle matters. Consistent deposits matter. Paying bills on time matters. Keeping utilization low matters. Having organized financials matters. People think lenders are only looking at income. No, they're looking at behavior patterns. That's why several people can make the same amount of money and get completely different outcomes. One person looks stable, the other looks chaotic, and banks hate chaos. This also applies way beyond loans. Even grants work this way. People think nonprofits get grants because they have emotional missions. Not really. They get grants because they demonstrate operational capability. Can this organization execute? Can they manage funds responsibly? Can they produce measurable outcomes? Can they document results? That's what gets funded. Nobody wants to fund confusion. And honestly, this lesson carries into almost every part of entrepreneurship. Investors, partnerships, clients, employees. People trust proof more than potential. That's uncomfortable because most people want credit for what they plan to do someday. The market rewards what you already demonstrated. That's why your first phase in business usually looks ugly. People online skip this part completely. They show the revenue screenshots, the warehouse, the cars, the freedom. They don't show the phase where they were manually doing everything themselves because they couldn't afford help. They don't show the years where they were reinvesting every dollar back into the business. They don't show the stress of trying to stretch limited cash flow across too many responsibilities. That phase is real, and honestly, that phase is necessary because it builds operational maturity. I've noticed something interesting too. The people who become obsessed with looking rich early are usually the same people who struggle getting access to real capital later because they spend all their energy signaling wealth instead of building financial strength. There's a difference. One person buys a luxury car to appear successful. Another person keeps stacking liquidity, building systems, improving margins, and maintaining clean financials. Guess who banks trust more? The second person every single time, because lenders care less about status and more about predictability. That's the hidden word behind all this. Predictability. Can they predict your behavior? Can they predict repayment? Can they predict business stability? Can they predict decision-making quality? The more predictable and disciplined you appear, the easier money becomes to access. And ironically, once you reach that point, you usually become less emotional about money anyway. That's why money starts showing up easier. Because desperation disappears. And desperation is expensive. Desperate entrepreneurs make terrible decisions. They take bad partnerships, accept horrible loan terms, chase scammy business models, jump between opportunities constantly, and buy into fake guru promises because they need money immediately. That urgency clouds judgment. But when you've already proven you can survive, execute, and create cash flow with limited resources, your leverage changes. Now you can say no. That's powerful. A bank offering bad terms. No, investor wants too much control. No, client wants to underpay. No. Desperation traps people into weak positions. Competence creates options. And this is why I tell people, your early business phase is probably supposed to feel underfunded, not forever, but long enough to develop discipline. Because once the money finally comes, you need to know what to do with it. Otherwise, funding just becomes a faster way to fail. And honestly, some of the best entrepreneurs I know started by doing things manually way longer than they wanted to. They learned every layer of the business. Sales, fulfillment, marketing, customer psychology, operations, margins. That knowledge compounds. So later, when they finally get access to loans, credit lines, investors, or large opportunities, they already know how the machine works. Now the money multiplies something proven. That's the ideal scenario. Not, give me money so I can finally figure this out. That approach usually ends badly. And I know this message frustrates people because it sounds unfair. If you're broke right now, hearing money comes easier when you don't need it almost sounds insulting. But it's not meant to discourage you. It's meant to redirect your focus. Stop chasing funding as the solution. Start becoming operationally dangerous. Learn how to create value consistently. Learn how to manage money responsibly. Learn how to execute with constraints. Learn how to survive without external rescue. Because that version of you, That's the version banks trust. Investors trust, partners trust, the market trusts. And once trust exists, capital starts moving differently. That's the part nobody explains online. The goal isn't just getting money. The goal is becoming the type of operator money wants to attach itself to. Because when that finally happens, you stop begging for opportunities. Opportunities start looking for you.